For reaction to September's report, we go now to Pittsburgh and Stuart Hoffman. He's chief economist at PNC Financial Services and a Bloomberg Best Economic Forecaster. Stu, thanks for joining us. I'd say, people on Wall Street focus still on the 9.1% number, but people on the actual street, Main Street, seem to be focused more and more on the U.S, the so-called real unemployment number, now at its highest that it's been this year, I think 16.5%. Is it getting better, or are things getting worse here?
I'm not sure the average person on the street knows the difference between the U3 and the U6. What they know is it's tough to get a job. It was summed up in a couple of the comments you just had. I would agree it was good, but not good enough, to paraphrase Mohammed. It was better than expected, but the unemployment rate is held at 9.1% for 3 months in a row. As you mentioned, the underemployment rate, as it's referred to, did tick up a little. But at least we had job growth. We had job growth of 100,000 in payrolls, almost 400,000 for the second big month in a row of household jobs. But there have been a lot of people who have not been looking, and they're coming back in to look. So we had the right job growth, but you're right, it's not fast enough. It's still a treadmill job market where the growth in jobs just matches the number of people who are looking for jobs, and therefore the unemployment rate is stuck at this painfully high 9.1, and the length of people who are unemployed, whether they're teenagers or adults, just keeps getting longer.
I wonder, do you expect this to change going forward? I mean, I know you have a relatively optimistic forecast, 2.5% growth for the second half. That's not enough to add jobs, is it, Stu?
Well, it's enough to add jobs. It's not enough to bring down the unemployment rate.
Yeah.
Yeah, I could see three more months, just sort of like we saw in September, where there's job growth, but it's matched by labor force growth. So the unemployment rate basically stays put. I mean, it could go to 9.0% or maybe even back up to 9.2%. So we're growing, but not fast enough. Now in 2012, depending on what happens at the federal level, depending on what happens in Europe, as you talked about it, this data has almost been lost in the downgrades in Europe and the worry there. I think we could do a little better in 2012, if that makes me relatively optimistic. 2 to 2.5% GDP growth, I think could bring a little stronger job growth, bring the unemployment rate down, but 9% to 8.5 or 8.75 over the course of 2012 still is not good enough. But I'll take it versus all the scare bears who've come out and now said we're definitely going into recession. And if they're right, the unemployment rate is going to be double digit by this time next year. And I think that's much, much, much too negative.
Is there anything Washington can do? I mean, what do you think about President Obama's jobs plan? He says it would add 1.9 million jobs. Do you agree?
I don't, and I don't think it'll get passed. I do think the tax cuts part of it, the 2%, maybe extending it or making it 3.1 for the payroll tax cut, could get passed, and I think should get passed, as should the unemployment compensation extension. That would be about $150 billion out of the president's $450. It's about 1% of the economy. I could see that adding hundreds of thousands of jobs, especially relative to letting taxes go up on January 1st if the Congress doesn't do something. But, I think it's a small positive, not as big a positive, because I only think probably about a third of it will actually get enacted into law.
Let me ask you, Stu, you guys at PNC do an economic outlook survey for small and middle market business owners. Only 14% of those that you surveyed say that proposed tax incentives would positively impact their hiring plans. So even if they get those tax cuts, a lot of businesses at least say, we don't know obviously what they would actually do, but say that they would not hire more people.
Yeah, that's what our survey says. Their biggest concern among small businesses whose concern about the economy has increased over the last 6 months. Their biggest concern is lack of clients, not enough demand. So if they get some payroll tax cut, holiday, basically 1 out of 7 of them said they'd consider that as an important enough to increase hiring. Actually, a larger number said a cut in government spending would encourage them more to increase hiring. So I don't know if it'll get passed in the president's plan, but I think it'll have a very marginal impact unless it's occurring in a broader period of a growth in the economy. One positive in our survey, 20% of small businesses said they are going to hire. 14% said they're going to lay off. That's still a positive 6. It's less of a positive than it was in the spring, but it's still positive. Back in '09, we had many more small businesses say they were going to cut jobs than hire, and that spread was actually negative. So it's still a small positive, but again, consistent with only small gains in jobs of small businesses, which do the lion's share of hiring in the economy.
And it's interesting that we just flashed up some of the highlights from the survey. 82%, the vast majority, don't want new loans. So even if the government continues to prod banks on the one hand to loan more money and sues them on the other hand, there's no demand really for loans.
Well, that's the way we see it, or at least our survey sees it. There's a very low demand for loans. I think the availability of credit has improved, although probably more for larger companies than smaller companies. But it shows that the low growth in loans or actual decline is not all because banks won't lend. It's because a lot of businesses are reluctant to borrow. You get a better economy, more businesses, small businesses will want to borrow. And we think that small banks or large banks like ours will be willing to meet that demand.
Got it. Hey, Stu, thanks so much for joining us.